Even that was clocking for a minute or so. I'm Jeff Plimpton. I've been with OptionVue on and off. Some of you may know me. Been here on and off since 2000, actually. And then I was also with Sheridan Mentoring for 5 years. So I've been around OptionVue, geez, like going on 17 years on and off. We're going to talk about earnings plays today. One thing before I start about earnings plays, earnings months are January, April, July, and October. If you are trading the VXX system or you're doing earnings, not earnings, if you're doing income trades, options trades, condors, butterflies, calendars, credit spreads, this might be something to supplement your trading, and it's been very exciting. I've been doing calendars on something you'll see a little later called NonMovers for a while. Some of them have hit 500 to 1,000%. We're going to be having 4 or 5 presentations. Hopefully they'll go a lot smoother than this one did. Again, hope this will work out from this point on for you guys. But again, for me, for instance, right now, using XIV, VXX has been one of my primary incomes, and then I do my options trading and earnings on the side to make a little extra money, and I have a little fun because I love trading options. So this is the earnings module. It doesn't come with a trial, and we want to do these series of presentations so you guys can get a feel for how this module works. It's an idea that Len got when he realized that sometimes after an earnings report, some companies that are similar to the company that had the earnings report tend to move in the same direction. And he kind of had that little epiphany, and he took it a step further, drove into the office, and chased it a little bit, and ended up creating this module and several new algorithms for the module. So this is something you would add to your OptionVue subscription. It's available on an annual basis only, and I'll give you the pricing a little later. We've actually cut the pricing on this to make it a little more reasonable for people, I think. The algorithms look over the past 2 years of earnings plays. So there's 8 earnings plays across the 2 years, and it gives you a series of information that I think you would find, I'm sure you'll find beneficial. There's 5 different types of trades that are tracked that we'll be going over. Every Monday we put in fresh data, and I'm hoping I can get on the software with you and kind of show you how you're going to import trades every week. Not trades, import earnings information every week. So you're going to choose what types of trades you want to do, and there's quality settings that are going to help you make that decision. And again, that's why I wanted to get on the software and show you. The tabs are organized at the bottom of the software. It's very clear. And there's an events planner that helps you plan your earnings projects during earnings months. Len put in a little diagram here just to show you how the algorithms work from the server to the OptionVue software. They show up on the quotes display with a series of information, earnings dates, there's notes in there, but it imports the earnings plays for you. And actually tells you what plays to do and what the quality and the possible results across those 8 earnings sessions were. It averages them out for you. It's really pretty amazing and quite awesome. Let me go to the next slide. So the 5 areas that we're talking about are prime movers, These are stocks that make big moves, and they tend to be undervalued. Prime non-movers, this is what I do every earnings play, every earnings session. They make smaller moves. I'm doing calendars. I do not want them to move, if possible. They're overvalued, so I can get some premium on the front month when I do the calendars, and they really tend to kick when I find the right situation. I won't be going over it today, but we use Trade Finder to find these calendars on prime non-movers. Earnings pairs. This is where he initially got the idea. Two stocks in the same industry, only one of which is announcing earnings. Well, the one that you're pairing it with after the earnings announcement often tends to follow the initial one. He got the idea, I believe, from MasterCard and Visa. MasterCard had an earnings report, and then Visa moved in a very similar manner. So it was quite a little epiphany. Echoes, two stocks in the same industry with one announcing 1 to 18 days after the other. Again, we can get on the software. I will show that to you. Runners have had the greatest amount of success. It's a situation where you pick a call or a put after the earnings announcement. Whichever way the runner moves, you buy a call or a put. And what's nice is you're in and out in a day or so, and often make 5% or more on one play. It's pretty awesome, actually. We can control what type of earnings possibilities we bring into the software. And these are the filters. So you see that prime movers, prime non-movers, earning pairs, earnings echoes, and earnings runners are all listed here. We can we can filter by dollar volume of options, which is in thousands. We can pick minimum stock prices. Actually, I usually put about $20, but Jim set this up with $5 to $10. And quality rating generally tells you what percentage you can make on a particular play historically across the 8 earnings months. So we will set up the filter first when we get into the software, check the earnings planner, do our imports, pull in our earnings possibilities, and then go in and look for some trades. So we have a little shot of the screen here. You'll notice it automatically brings in earnings dates with the quality ratings. We receive all of our earnings data from OptionSlam.com. You guys can check that out on your own. And you can look at the earnings tabs just by hovering over the tabs down at the bottom here. Okay. Again, the event planner is updated as you do your imports, and it'll tell you which ones to look at. Runners seem to have had an incredible amount of success. I generally don't do those. I've only done a couple. Both of them did work out. But you can use the earnings planner here to decide on trades during earnings. I notice he has May up here, but April is an earnings month, and we are moving into an earnings season. So the calendar isn't, this one is, but the calendar isn't very filled out at the moment. But all these plays will be coming up, and you can check them out, do your homework, look at the quality rating, and decide what plays you'd like to do. So just a quick review. Prime movers, they involve one stock. Prime non-movers, one stock. Earnings pairs, obviously 2 stocks, pairs. Echo plays involves 2 stocks. Both the pairs and the echoes, you're going to trade the secondary one. and runners involve one stock. So just to define each of these categories, prime movers, these are stocks that make big moves. And generally we do straddles and strangles on these. Buy a straddle on the day prior to the announcement, sell it on the day of the announcement. You're buying inflated volatility, so all of these are playing the volatility crush. And I'm sure many of you guys are aware how that works. The OptionVue software actually now calculates the volatility crush. These stocks have a history of making big moves, and they're placed in that category. And Len said, and to my knowledge, these are categories he made up. I've never heard of them before. If any of you have, it'd be interesting to know. So these are original categories to put these under. All right, let's go to the next one here. Prime non-movers, this is what a few of us in the office are trading and doing calendars on. These stocks make smaller moves. So it's nice to have them categorized ahead of time to make small moves. We can put calendars on, and if the Vegas situation works out, we make the money in the right situation. It's been fantastic. Buy a calendar spread or sell a straddle on the day prior to the announcement. Close it on the day of the announcement. Selling the inflated options pays off because the options tend to be overvalued. When you see this on a risk graph, it's really pretty awesome. Overvalued apparently prior to the announcement. And we kind of expect that, right, with implied volatility going up. It sort of makes sense. Let's move on to the next one here. Earnings pairs. This strategy involves two stocks, a primary stock that is making its announcement, and a secondary stock that is a company in the same industry, which tends to jump with the primary. The first one I did, I think, was Google and Baidu. Len came running back here in our office and really felt like Baidu would be a good play, and it was. I don't remember the exact percentage, but it was really an awesome play. So you can buy a straddle, often non-inflated options of the secondary stock. If the primary jumps, often the secondary will also, which was, like I said earlier, the initial idea to doing this. Echoes. So this is a little more specific than the earnings pairs. This strategy involves two stocks in the same industry. If the primary stock announces the jumps more than 3%, and then if the secondary stock announces 1 to 18 days after that. So there has to be an announcement within those 18 days. Take a position prior to the announcement that will benefit from the secondary stock moving in the same direction as the primary did. It says use a spread so you can benefit from the volatility crush. So a spread, probably a vertical spread, would benefit from the crush, right? Bull put spreads, bear call spreads, or short volatility, short vega. So these are pretty amazing also when they work out. Runners have had, you'll see a chart in a little bit, runners have had the most amazing returns so far. These are stocks that tend to run on announcement day. If the stock opens to the upside, go long for the rest of the day. Stock opens to the downside, go short for the rest of the day. Calls and puts have had the most success. We're generally around here, we're not one to go long calls and puts, but in this case, it's been incredibly effective. And let me show you that graph I was talking about. So this information, again, starting with $20,000 in capital, we placed all recommended trades, and Jim actually does this for every earnings season. placed all recommended trades according to default settings. So he just follows the settings in the earnings module. There were a total of 91 recommended trades in all 5 categories. You choose the quality settings. Obviously, you guys are going to have to pick and choose. You're not going to run all the plays. I think it says down below he ran $2,000 for each play. You're going to pick and choose. And I think the graph shows the highest returns for different categories, at least for the last quarter here. Running 2,000 per trade. Looks like E-overs naked. Again, like I said, runners had the biggest results. Calendars said didn't do too well. They haven't done well the last couple earnings seasons, but boy, in the past, when you find a good calendar running criteria that we run in Trade Finder, they've been awesome, actually. So as you can see, E-overs, so prime non-movers, actually prime non-movers did really well, runners did really well. We can always go back over this sometime if you guys want, but the results have been amazing. I would really have liked to get on the software with you. I'm going to just try dragging it over, but I don't know if this is going to work. I have a feeling I'm not going to be able to bring the software up. It's just a bit of a drag. I'll try one more time. I'm not taking any more of your guys' time here trying to get that to come up, but the software doesn't seem to just pop up on here. All right, I'm not keeping you guys any longer. This has been a quick overview of the earnings module. James Hogan, when he does his presentation, will go into more depth and put on some trades with you guys. Frank Fahey, who has over 30 years experience in the world of trading, he's a former market maker, is going to do a presentation on how volatility and assets tend to act during earnings season. He runs an earnings course for us, so I hope some of you will be able to make it, and I hope the whole presentation thing will go smoother. Jim Graham's going to go over the modeling. I mentioned that Len's created several algorithms for this, and he'll go over how the modeling works. And I'm hoping that maybe Steve Lentz will get in. He's our director of mentoring, the mentoring program. I see Alan Winston, estimating vol crush is difficult. If you underestimate the crush just a few percent, this is disastrous for calendars. This is why we remodeled the software. There's a whole section when you open up an asset in the matrix and click on model, there's a volatility area that Len redid all the modeling to anticipate what the vol crush is going to be. The software itself will help with that. You're absolutely right. How the vol crush treats different strategies, well, it can be disastrous if you pick the wrong strategy, right? I mean, if the vol crush, you would think it would destroy a calendar, for instance, right? Calendars are positive vega. I assure you, in some situations, it did not destroy our calendars. So Alan's right. We have to anticipate these vol situations, and Len's modeling has helped with that. This is in anticipation of the vol crush. This whole module is in anticipation of the vol crush. Again, you guys, I'm really sorry that the quick meetings thing wasn't too quick. This module is $1,200 per year. It used to be $2,400. So we've redone all of our pricing. This one actually came down. If you're interested, you're welcome to call in, talk to myself, Jeff Plimpton, or James Hogan, and we can go over the earnings module together in a little more personal manner, and we can jump in on anything you'd like. That's it for today, you guys. I'm not going to keep you any longer. You were all very patient for 20 minutes while we tried to get this going. And please anticipate James's presentation. He does a lot of earnings plays, and really appreciate you guys coming. Thank you very much.